Good afternoon and welcome to the SHANTA Gold Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Eric Zurin, CEO. Good afternoon, sir.
Thanks very much and good afternoon. Thanks everyone for joining this IMC meeting today. We'll talk about our second quarter results, which are absolutely terrific, and take some questions. So with that, I'll start now, take my screen off, and kick off with giving you a bit of an update. So this morning we announced record quarterly performance. During the last quarter, production was up 92%, and that's clearly demonstrated the benefits of having SINGIDA into our portfolio. It couldn't be any more clear to me what SINGIDA has done. And so with this increase in production, we've announced better than expected cost performance. Our net debt has more than halved, and we have a hugely bright future with the West Kenya project, which is on the horizon. So lots to look forward to. As you can see here on slide 2, SHANTA is what I would say totally undervalued. We have a portfolio of assets that's worth about $500 million. Our market cap's 130, and that basically means that there's a lot of upside. A couple more takeaways here on this page. We produced 100,000 ounces of gold. We're in that bucket now. We produced 29,000 ounces in the second quarter. It's done. So we're part of a different breed of companies now. In the second quarter, we also generated $23 million of EBITDA. So you can see on this slide, Liberum has the full year estimate at 60 million. In Q2 alone, we did 23. In the first half, we generated just over 30 million, and half of that was with only one asset. So things are going really well. Net debt reduced, as I said, from 19 to 8.7 million. With cash on the balance sheet, lots of financial flexibility, in very good health. We're incredibly undervalued, as I said already, and there's a lot of upside. So on to slide 3 and a few of the highlights. So what's our story? Well, we're a gold producer in East Africa. We've been listed on AIM for 17 years, 100,000 ounce gold producer. We've achieved that milestone. And we hold just under 4 million ounces of compliant resources across our tenements. So very, very exciting from an upside potential. We have a 20-year track record in East Africa. We know the area well, unblemished safety record, and we have outstanding ESG credentials. So from our perspective, SHANTA is a very nice vehicle for generating value. Now, over the last few weeks, we've had a bit of churn in our shareholder register. Our largest shareholder, who was on the register, called OD Asset Management, is now sold down significantly to, I think, 1.1% as of the end of the month. And we welcomed Lombard Oye to the register, who is a London-based fund manager running that portfolio. They're just under 7%. So welcome, Lombard. What I'd say here is a couple takeaways. One, half of our register is in the retail hands, half is institutions, which means we get good liquidity on our shares in terms of trading volumes. But yeah, we're supported by what you can see here, very good blue chip institutions. On to slide 5. And a bit of a recap of what's changed in SHANTA's profile over the last 2 years. And a lot has changed, and I'll take you through that now. As you can see here across the board, operations and profitability are up. Today's record production results are clear evidence of the change in that profile. The gold price has gone up, but the opportunity here is that the market's not recognizing the value of our assets in our share price. And so if you go back 2 years ago, we had one mine. Today we have 2. That production base has gone up by 50%. And most notably, we're on the radar other mining companies. So we're the right size, the right scale. And you can see that obviously from the traction we had from Shandong last year. Looking pretty good at Shanta. Now on to slide 6, and a bit of a discussion on our Q2 results, which were across the board outstanding. So during the quarter, we produced 29,403 ounces of gold. That's up 92% from Q1. We've had two drivers of this. One is the better than expected performance at New Luica, which was up 26% from Q1. And then the outstanding start to life for Singida, which went into production on March 30th. Poured its first gold on March 30th, went into commercial production on June 1st. And in its first quarter, produced 10,000 ounces. So the team at Singida gets full marks for the work that they've done. During the quarter, we had far better than expected costs at both New Luica and Singida. The costs at New Luica were down by about 20% from Q1. That's thanks to better than expected production, slightly better than expected production there. But also we had we really kept our finger on the mining costs, which were down about 7% from budget. So the team's done a great job with New Luica. Then over at Singida, the costs there were $736 an ounce all in sustaining. Those were about 40% better than we budgeted. Again, down to more ounces produced than we thought we would do, and really getting a feel for what the kind of the steady state production and cost might look like. So we're only 100 days into life at Singida. Things are going really well, and we're going to keep our eye on what the long-term cost structure might look like. In terms of financial flexibility, that's strengthened obviously in a massive way. Our flexibility here, we've added we've doubled our available liquidity to about $25 million. So we're in great shape. I don't want to get any questions on equity raising because it's pretty clear we're not going to be doing that. So no questions later on that. Most notably here, Singida has gone from CapEx center to cash flow generator, which has massively turned the dial in our favor, particularly at these gold prices where we're fully exposed to the gold price, no hedging, and which means as the gold price goes up, Shanta should follow. And then, of course, safety's been outstanding. Full marks to the team. Literally can't do any better than what we reported. Recordable injury rate of 0.00. So absolutely excellent, outstanding. On to slide 7. Quick recap on our guidance, because I get quite a few questions on that. What does it look like? For the full year, we've guided for 90 to 98,000 ounces of production. So far, we've produced 45,000 ounces of gold in the first half. Excuse me, but remember, Singida has only contributed for 3 out of 6 months. So it's, I think we're in very good shape from that perspective. But obviously, just over 5 months to go. New Luica, our main asset in Tanzania, is tracking to hit the middle to the upper range of our production and cost guidance. So that's in great shape. And then Singida, you can see here, we've produced 10,000 ounces in its first quarter, 2 more quarters to go to get to 24 to 26,000 ounces. So we're feeling pretty good about the Singida production forecast for 2023. And so we're cautiously optimistic that we'll do that, or maybe even better than what we set out for Singida. I can report so far that for the first 20 days of July, I want to tell you what I know, which is that New Luica is kind of on track with production, and Singida is doing better than expected. But that's only 20 days, so don't extrapolate, but it gives you a flavor for how things are starting this quarter. On to slide 8, where we talk a bit about safety. This won't be a very long discussion because, as I said, safety, touch wood, is excellent. We had TRIFR rate, total recordable injury frequency rate, of 0.00 in the quarter, and 0.00 for the first half of the year. So I would say we are operating on a very strong bedrock of safety, and safety is the starting point for what is a good outcome in terms of production. On to the next slide, where we will talk a bit about our Q1 results at NLGM, and I'll cover the physicals first and then go into the production. So looking down the column, mining of physicals was in line with the volumes we've done over the last few quarters, and it was on track with our forecasts. We're pleased with that. The equipment was operating well. The mill tons of 220,000 ounces is exactly 1/4 of our full year forecast. So that's right on track. In terms of the blended grade during the quarter, that was a little bit better than what we thought. So 3.13 grams per ton. And the differentiator here in Q2 was, if you can think of it this way, we had better equipment availability. So the equipment was running better than it was in Q1, which means we were then able to stay on plan, and we were able to mine the areas we wanted to mine in the quarter. Now, another enabler to all that was better power reliability. So we had less downtime with power, and which just means things go well. You know, you can imagine, you know, the corner shop, not that we're a corner shop, but you know, the big hardware store. When the power doesn't work and the equipment's not running well, you're probably not going to have as many sales. And this quarter certainly was great across all fronts. At NLGM, we produced 19,338 ounces, 26% up on Q1. And most notably, this is the one I look at, is the profile of those ounces. We didn't have one quarter making up the lion's share. In fact, we had 3 very nice months that all delivered above 6,000 ounces of gold. I think it ranged from 6,300 to 6,800, and nice steady production profile. So that's kind of what you're looking for in a mining operation, is consistency and steadiness. Now on to SINGIDA, and a quick discussion there. Some initial statistics. First gold pour took place on the 30th of March, and we declared commercial production on June 1st. Milling, so this is the throughput we planned for in the long run, over the life of mine, 1,000 tons per day of milling. And so during May and June, which were months 2 and 3 of SINGIDA's life, we milled on average 972 tons per day. So that's a great outcome for what is the second and third months of a brand new processing plant. You know, it's about 3% off from plan. Some days we milled, I think, upwards of about 1,200 tons per day. So the potential's there to do that if we have to. And on the whole, I said just under 1,000 tons per day in Q2. SINGIDA production obviously benefited from higher than average gold grades on the stockpile. We expect those to normalize over the 5-year plan. And then the big question for us is when, probably not if, we will be adding a second mill to SINGIDA. And that will really be a derivative of the exploration that we do and the mine life extensions we can add through reserve additions. So lots to look forward to at SINGIDA. It really has been a huge rewarding outcome for what was a decision I took 2.5 years ago to go ahead and building that operation. SINGIDA was basically dormant for about 10 years, and we did something with it. We took it out of its holding pattern, and we turned it into a real operation. And so that's something we're very proud of, and have generated a lot of value for our shareholders. On slide 11, we highlight a few metrics from SINGIDA. And this is where it gets, keep your eye on this. It gets pretty interesting here, because on the left-hand side is what we planned for. Then on the right-hand side is what we're actually seeing. And, we're only, as I said, we're only 100 days into SINGIDA's life. But so far, some of these metrics are absolutely doing better than what we thought. Starting with the amount of gold we're recovering from gravity. I think 1 month we recovered about 50% of gold was through gravity at SINGIDA, and that just means there's less competition for the remaining gold in the tanks, and usually means you can get your recoveries up, and that's exactly what's happened. The purity of the bars that we produce, the doré bars, is better than what we thought. And we thought we'd get about 80% of the gold of the bars being gold. We're getting about 90%, and And that's just a function of what's actually in the ore. So overall, things are going well, very well at Singida. Onto West Kenya quickly, and then we'll open up for some Q&A. But recall, we bought the asset for $14 million, 1.4, back in late 2020. Today, West Kenya is worth a lot more than that. I think it's worth upwards of about $100 million, if not more. And the resources that we have at West Kenya are about half of everything we have within SHANTA. So it's a big part of our future. It's an important part, and it's certainly going to deliver a lot of value for our shareholders. West Kenya is not a known story, and it's partly because it's been caught up in as a non-core asset of larger mining companies for many, many years. So what we're doing is unlocking that story. And as you can see here on slide 12, there's a lot of potential for West Kenya to be a very exciting asset. On to slide 13. What's the plan for West Kenya? Well, exploration and infill drilling recommenced during the quarter. We believe West Kenya will cross into the 2 million ounce mark of resources next year when we update our resources. During the quarter, we allocated capital for up to 26,000 meters of drilling, 80 holes around the Isulu and Rumula deposits. We got going with technical studies with external consultants. We think that the West Kenya project will probably turn into a hub and spoke type of processing plant at Rumula, which then welcomes ore from Isulu, high-grade ore, and is able to then consolidate the Rumula mining camp through the other targets there. So that's kind of what's in our head. Lots of work to do there. Obviously, the big one being moving this project forward to permitting and getting mining licenses. And so that work is ongoing. And we're allocating capital to getting that done. Then finally, on the last page, a little bit about the next couple of months. What should we expect? We have drilling results out. We'll have from West Kenya, from New Luika. Drilling will start at Singida in the not too distant future. We'll have our interim results out in September, at which point we'll be talking about dividends again. And then, in 90 days from today, we'll probably have our Q3 results out, and hopefully we'll be able to showcase that SHANTA is firing on all cylinders again. So with that, I'll open up to some questions. Thank everyone for participating. And as I've done before, and I'll do again today, I'll answer all questions without exception.
Eric, thank you very much for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Eric, as you can see, we have received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. Could I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Great, thanks. Ehab has asked, great results today. Are you actively looking to sell? I'm not quite sure what that means, but I'm a shareholder, so I'm not selling my shares at these prices, and because I think there's a lot more upside to come. So next question, Ramon O has said, are you planning any roadshows or investors events to increase the shareholder base, especially regarding institutional investors? Yes, we'll be out seeing. I'll be back in the UK in about a week's time, and we'll be out seeing investors and shareholders start of August to take them through the results. Sam has said, are your plans to stay with the business? I think I've covered that in previous questions. The answer is no. In April, I announced my intention to depart SHANTA onto other opportunities, and so the board's going through that succession process now. Sam has asked, you've said SHANTA could be an attractive bolt-on target. Given the recent news with Moral and Prom and Manazi Bay, do you fear potential acquirers will be put off by opposition from the Tanzania government to takeovers? Over the years, I've discussed M&A with the Tanzanian government, and the feedback I've got unequivocally is that the government will never get in the way of corporate action, and the government is supportive of corporate action so long as new owners maintain the good standing that Shanta already has in country as a good corporate citizen. So I'm not quite sure who these other groups are, but there is no opposition from the Tanzanian government to M&A. Alexander M has said, can you please give an update on the CEO search? We did in the RNS. The search is ongoing, and when there's an outcome, there'll be an announcement. Ramon has said, are the all-in sustaining values for Q2 likely to be repeated in the future? I hope so. A lot of that is driven by two parts. One is higher production, and the second part is really having our finger on costs. So making sure that we're only spending in areas we need to, and so we hope that will be repeated. But we're certainly, as we've laid out guidance, New Luik is tracking for $1,200 to $1,300 an ounce all-in sustaining. Singida is very, very early in its life, and I think, as I said already, the grades were above plan in Q2, and we benefited from better than planned grades on the stockpiles. And so we expect what I'd always point to is the long run rate in the 5-year plan that we already announced for Singida. Alex has asked, when do you expect to release West Kenya drill results? So these new target areas highlighted in 24th May update. Probably sometime in August. I haven't actually seen the results. What we did is the team started drilling, I think, towards the end of May. So they call it 7 weeks in. They then send a very large batch that gets pulped. They send it to Vancouver through MSA Labs, and then we get a very large batch of results. We haven't had those back yet, so I suspect it'll be sometime in August. I don't understand the next question. It's from Amri. How about employee? Don't understand that one. So I'll move on to the next. Mantas has said, is the $6.7 million VAT payment included in current net debt figure? It's not. It's not included. So if we had that back, the net debt would have been even lower, would have been around 2 million. Could you give some guidance on how oil price affects all-in sustaining costs? It's a very good question. The way to think of it is per month, we spend about, I think it's about $1 million per month on heavy fuel oil, and per month, so that's 12 million. It's roughly about say about $160 per ounce of costs. And so if the oil price goes up by 10%, that adds, call it $16 per ounce. If it goes down by 10%, it shaves that much off. So that's sort of the sensitivity analysis I'd point you to. At Singida, power is driven by Tanesco, so we're on the grid, and so we only have heavy fuel. We only have diesel there as backup. It's not our primary source of power. Peter D has said, can you comment on the forecast for Singida, the all-in sustaining 1,300 to 1,400 when Q2 was 736? Are you expecting a decline in grades at Singida over the coming quarters? Two parts to this answer. One is Singida is very, very new in terms of being an operating mine. So as I said, it's only a couple of months old, and so we're getting a feel for sustainable cost structure. The forecast we set out in our 5-year plan don't contemplate 40,000 ounces a year at Singida. I mean, at best, I think it was 37,000 ounces in 1 or 2 years from now. And so this first quarter for Singida was certainly better than expected. We would always point back to the 5-year plan that we've set out, and the costs going back up towards about $1,000 an ounce, roughly. So until we know different, that's what we're guiding for. Anthony B has said, news reports have noted mass protests in Kenya against new taxes. How is Shanta affected by this? it's very interesting. I go to Kenya a lot, and it's very interesting what you read in the news versus what you actually see on the ground. And what gets reported on TV, there aren't mass protests. First of all, it's certainly what the media likes to report. Kenya is a very calm and gentle and safe place to visit. I go there a lot. Tourists go there a lot. Shanta doesn't produce anything in Kenya right now, so we don't actually pay any corporate tax. The fiscal regime is set at, I think it's 30% corporate income tax, which is very standard, and that's what we're expected to pay, and that's what we model. Follow-up question by Anthony is, when was the last time you were in Kenya, Tanzania? Can you say something about your personal experience? Good follow-up question. So I was last in Kenya, I was last in Tanzania last month. I'm currently in North America, and I'll be back in Tanzania in, I think it's the second week of August. So it's a lovely place to go. If you haven't gone, do go. These are beautiful countries, much different to West Africa, which is far more hostile. And so it's a great place to go. The people are very welcoming. The culture is great, and it's a lovely destination. Here, the next question by Sam is, in Q2, there seems to be a gap between adjusted EBITDA and the reduction in net debt. Why is this gap so big? So here we're referring to $23 million of EBITDA and only a $10 million reduction in net debt. The simple answer is between EBITDA and free cash flow, which is the number that reduces net debt, you have a couple of items, one being CapEx, another being taxes, and then another being financing costs, so interest. And so EBITDA being earnings before interest, before taxes, and before depreciation, which is CapEx. So when you take off those three items, you get to free cash, and that's why you only get, that explains the gap, the bridge between EBITDA and debt reduction. John has said, thanks for the great quarter. Could you be tempted to stay a bit longer? John, thank you for those good wishes, and appreciate the support you've given to Shanta. John says, what are the financing plans for West Kenya? So what we've set out to say with West Kenya is we've budgeted $10 million in 2023, and so that's the plan, and we'll finance that from cash flow. We are financing that from our existing cash flow. Longer term, we're certainly working out plans to think about how West Kenya, how the path to first production unfolds. I think the irresponsible way would be simply just diluting everyone down, particularly at this share price. We're not going to do that because that's not in my best interest. And so there are certainly clever ways to finance West Kenya, a bigger plan, without simply asking the shareholders to dip their hands in their pocket. So we're working up those plans, and I'm sure my successor will be very responsible in how he or she takes that project forward. Nigel has said, get well soon, Eric. Thanks for all your hard work. I must admit, it is very early here. It's the day started around 5:30 for me in Canada this morning, not too long ago, and I'm certainly a little bit tired today. So thank you, Nigel, for that vote of confidence. Andy has asked, did the low SINGIDA all-in sustaining cost in Q2 benefit from the large ore stockpile? No, it didn't. The all-in sustaining costs are normalized for mining and processing. There's two drivers to that at low cost. One is on a per unit basis, the production was very good, so 10,000 ounces, and then second being on the fact that SINGIDA is just a brand new operation. So the equipment is working well. It's all new, and we're getting our hands on what that sustaining cost base really looks like going forward. Ian has asked, are you able to expand discussions with government re the amended Mining Act? It's very interesting. We did go into the government in April, introduce Shanta to some of those government members who didn't know much about us, and then it's been very little progress after that. So The Amended Mining Act took place 6 years ago, and SHANTA continues to pay its taxes, contribute royalties, invest in community projects, and invest in the country. And I think the government likes that. So we're in very good hands with the government. Ian has asked, given your increased profits, will you be able to accelerate the process of offsetting VAT against tax? This VAT is normal at the moment. It has been for about 2.5 years. The VAT gets audited and then it gets refunded. And where it isn't refunded, we offset it against corporate tax. So the answer is yes. Historical VAT, we're still working on that. It's now in formal proceedings with the Revenue Appeals Board. And we have the best hired help to make sure that we get the most favorable outcome for our shareholders with that VAT. So we're working on it. Thank you very much. There's no more questions. So I'll hand over back to the operator to close the call.
Eric, thank you. And I think you've addressed all those questions you can from investors. And of course, the company will review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, could I please just ask you for a few closing comments?
Great. Well, first of all, I'd like to thank investors for their ongoing support. It's been a long journey. I'm certainly very pleased with how things have unfolded over the last 6 years. And SINGIDA really has shot the lights out. So we're in great shape with 2 producing mines. West Kenya's totally under control. It's been a fantastic run for SHANTA, and there's certainly a lot more to come. So we're looking forward to delivering more value for you and being good operators. So thank you for your support. And with that, no further comments.
Eric, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SHANTA Gold Limited, we'd like to thank you for attending today's presentation. Good afternoon to you.